Welcome to Dad's DeFi space, where we provide expert insights and strategies to help you navigate the world of decentralized finance and DeFi. Whether you are an experienced DeFi investor or just starting out on your journey, understanding and applying the right DeFi strategies can help you grow your portfolio and become a more savvy investor. So, if you're looking for free resources to deepen your knowledge in DeFi, make sure you check out dadsdefispace.com or not .com, dadsdefispace.org. Our website offers a wide range of articles, guides, and educational content that's free to help you maximize your DeFi potential and make smarter investment decisions. We do ask for an email address, but that is it, and we will not spam your email address. For those that are ready to take this journey to the next level, consider joining the Underdog Investment Group with CryptoLabs Research. Links below, 20% off your first month. This exclusive community provides access to top-tier DeFi strategies, expert advice, personalized support to help you thrive in the DeFi space. They're just one of the best communities out there. And if you enjoy this content today, don't forget to hit that like button, subscribe to our channel for more of these DeFi strategies and crypto market analysis. And leave a comment below with your thoughts on Bitcoin's price, your favorite altcoins, or DeFi strategies or positions you're currently using. I'd love to hear from you. Become a part of the community. Now, let's get to today's topic. We, as crypto and DeFi investors, we always are looking at ways to protect our principal while we are earning fees within a liquidity position. When you are a DeFi investor, what we're doing here is earning fees for swaps being performed on decentralized exchanges. Now, what's so interesting about this is we don't have to have permission. We don't have to be accredited investors in America. And we can do this with the smallest amount of money out there. I have explored new liquidity, DEX protocols and yield farms that I was able to put $10 in and then watch and see what happens, which, by the way, I would suggest that whenever you're trying out new techniques. Okay. So if you are active in the DeFi space, I'm telling you, you got to know providing liquidity in concentrated pools like we do on Aerodrome and Orca can be an excellent way to earn fees by focusing your liquidity within a certain price range. So by focusing liquidity within a set price range, you can maximize your capital. You maximize it efficiently, you collect a higher share of fees, and this occurs when trading occurs, but only within a specific range. However, guys, there's a catch, because if prices move out of range, your assets won't earn fees and you're gonna get converted into the weaker asset. When this conversion slowly happens, as trades are happening. And if you wanted to know the process, what's really happening, say you deposit $100 of USDC and $100 of Bitcoin into a USDC Bitcoin liquidity pool on Uniswap. As people trade Bitcoin for USDC, you're going to have more USDC within that range and less Bitcoin. And likewise, if people are trading trading Bitcoin for the other way around, if they're trading USDC for Bitcoin, you'll have less USDC, more Bitcoin. As this occurs, you suffer impermanent loss. Now, if the range of the pool goes back to the position you set it at, there's no impermanent loss. But what you need to understand is that this risk of impermanent loss increases when you're in a volatile pair of assets and they're not correlated. They're moving in opposite directions. And we'll look into correlation during another live stream. But when you rebalance the liquidity pool positions effectively, you can help not lose your profit to impermanent loss. You manage your risk. You keep earning fees. So in this guide, in this video, we're going to look at 3 strategies to do this. So these strategies can help you stay in range or make decisions of what to do when your position goes out of range. So the 3 we're going to look at today is the traditional rebalance, the snuggle rebalance, and dynamic rebalancing. So basically, I'll show you an example of each, but and we're going to do this on either Orca or Aerodrome today. But the traditional way of rebalancing a liquidity pool is, a traditional rebalance. The thing about traditional rebalancing in a liquidity pool is your assets will always stay 50-50, just like a full range pool. So when you keep the assets proportional within a pool like this, when prices move significantly, your assets are going to get traded into the other asset. If you go out of range, you may need to rebalance the pool to get that pair back to the target ratio. The problem with traditional rebalancing is you will suffer lots of impermanent loss because you're always moving the pool almost 50 or at least 25% over back into range, usually a lot more than that. So, oh my gosh, did we really? I think, let me check the chart real quick. Oh my gosh. No, not quite. We were getting so close to 90K. Not quite. All right. Back to work, ladies and gentlemen. Anyway, whenever you have a liquidity position and it's in a 50-50 range, you're going to always have to have periodic monitoring. So yes, you can earn more fees when you concentrate it, but you can also suffer that impermanent loss risk. That's why what I learned within our UIG private DeFi group was it's probably best to wait between 48 to say 3 days, 48 hours to 3 days before you decide to rebalance a pool, especially if you're doing a traditional rebalance. The amount of impermanent loss you'll suffer it'll wreck the principle of what you invest. Now, this is okay if you're earning a lot of fees. As long as the fees outpace the impermanent loss, basically it was a decent investment. All right, so the second one we're going to talk about today is called a snuggle rebalance, excuse me. A snuggle rebalance is actually a method that I was doing before I joined the UIG, but I can remember talking with some of the teachers and mentors within the program about the snuggle rebalance. I just never called it that. So the snuggle rebalance is one of the more cost-effective ways to stay within a range. You either have to wait till it goes way out of range, and then you can snuggle, or not way out of range, but out of range and then snuggle, or you can snuggle little bits and pieces as the pool starts to adjust. So you can stay without range without constantly adjusting the entire position. You're just adjusting it ever so slightly so you're not having to swap the ratio of assets within your liquidity pool. So snuggle rebalancing is especially useful in a very volatile pool because it'll help you avoid some of the impermanent loss by reducing that likelihood of sudden strong adjustments. Now, when you implement this, basically what you're going to do is, and I'll show it to you in a minute, is when you rebalance a pool, you're only going to just barely put it in range where it went out of range. And I'll show you in a minute. It's kind of like the soccer player who was almost out of bounds, but was able to keep 1 foot in, or the football player who made the great catch and kept that 1 foot in bounds. So they were able to get the first down. So the third method that I've just been using a lot recently is called dynamic rebalancing. And this is a way to adapt to volatility and stay within range. So dynamic rebalancing is actually a advanced strategy. It's ideal for liquidity pools that assets are even more volatile. I mean, we're talking small cap, meme coins, things like that. So this allows you to adapt to the volatility to stay in range. And to be quite honest, to make a long story short, okay, basically, it's like implementing a snuggle rebalance while you let the asset move, maybe find the new support or the new resistance, and then you can snuggle into the new range. For instance, like if you're rebalancing an asset, if the asset moves by more than, I don't know, whatever your percentage may be, 20%, 30%, or that divergence exceeds a set threshold, you that is when the rebalance happens. To be honest, this advanced strategy is much better if you use a automated liquidity manager like VFAT for Aerodrome, or let's see, Revert for Uniswap positions, maybe Crystal, right? I love using Crystal. Might be able to look at that in a second. And because that's what I was going to use to explain how you would do these three rebalances to avoid impermanent loss. So um, let's talk a little bit about pros and cons before I actually get into the tutorial. Excuse me, the tutorial. Um, for example, with a traditional rebalance, your um, your pros are it requires less active management and it's pretty straightforward. You're always swapping your assets 50-50. It helps maintain a balance between the two assets, especially if you're bullish on both. Although I would beg to say there are other strategies that are better. It's ideal for stable pairs because the likelihood of large price swings is lower. But at the same time, especially in a bull market, you need to keep much wider ranges or you're going to miss out on some of that price appreciation. It's good to earn fees. But guys, girls, we want both. We want fees and price appreciation in the DeFi space. Now, some of the cons of a traditional rebalance or transactions costs can add up because you might be rebalancing a lot, especially if your ranges are very narrow. It's not ideal for highly volatile pools, especially if you cannot adjust it for market conditions. If you're going to do this, you have to be extremely active. It's almost like being a swing trader. Now, liquidity providers in very stable or large cap pools, think Bitcoin and Ethereum, who want to maintain balance exposure without frequently adjusting their position, they may want to go a lot more conservative and then they just do full range liquidity positions and the assets always stay 50-50. Now, for the snuggle rebalance, we have some different pros and cons with this one. Now, pros of the snuggle rebalance are it reduces the impacts of fees and slippage because you're making smaller and smaller adjustments within the liquidity pool as far as rebalancing of assets. You avoid large adjustments that can create higher impermanent loss. This is very effective for volatile pools, especially with fluctuating prices. But the cons are to do a snuggle, you definitely need to monitor market conditions closer. The tolerance of ranges may need adjustment more so. But again, this is probably the best method for highly volatile pairs in the DeFi space, right? And the final one, which I do think is probably the most advanced technique of avoiding impermanent loss and rebalancing, is the dynamic rebalancing. Now, the pros of dynamic rebalancing are you can adapt extremely quickly to market changes, which means you can keep all your liquidity positions in range when it's very volatile outside. It can also help reduce impermanent loss. You're adjusting positions according to the asset behavior. And the best part of it is these are the kind of strategies you can put into automation tools like VFAT. And if you do it correctly, it does the dynamic rebalancing for you. But I will say, please stay away from rebalancing too much. especially with automation. I was playing around with a Brett pool of this in VFAT earlier in the year, and I watched my principal get cut by 50% in 3 weeks. And that was not market volatility, that was impermanent loss. Now, I will say, I earned almost enough fees to make up for all the impermanent loss. The APR on it was almost 1,500% or something. But that is not the way to play this game, ladies and gentlemen. It's just not the way to play the game. So, with dynamic rebalancing, the pros are you can adapt quickly to market changes, keep positions in range. During volatile parts of the market, it reduces impermanent loss because you're only adjusting the position according to the behavior of the two assets. And if you use the automation, it minimizes the manual management of your positions. But it is harder to do, more advanced technique. I definitely would suggest getting involved with a group. Go to our website, dadsdefispace.org, because lots of free articles, free educational resources, and you get to see my weekly liquidity pools, which I do need to post that today or tomorrow for this week. So add Dad's DeFi Space so you can check out that new liquidity pool. And on top of that, if you really want to up your game, check out the private DeFi investing group, Underdog Investing Group, UIG, CryptoLabs Research. Excellent, excellent, excellent people. Excellent, excellent DeFi educators. Now, to sum all this up, you got to realize that in DeFi yield farming, rebalancing is not just a good practice, it's absolutely essential. Because with concentrated liquidity pools, if an asset moves out of range, you no longer earning those fees. So please maintain your pool's effectiveness by managing the impermanent loss, managing your risk, and to be quite honest, set those ranges a little bit higher. Don't be that yield chaser. And if you're going to be, like I can be at times, do it with a small little piece of your portfolio. Make sure you know what you're doing first, not financial advice. I wanted to check out WIF. I don't usually look at a lot of our altcoin positions, if you know what I mean, but this is one I really, really want to check out. By the way, you know what? We almost always pull up our charts on TradingView. Have y'all ever checked out liquidity pairs on DEX tools? And I want to make sure that if you are in the DeFi space, you better know what DEX tools is. DEX tools is sort of like it's a analytics program, kind of like TradingView, so you can check out different pairs and liquidity pools that are just all over the crypto and the DeFi space. This is a Brett pool over on Aerodrome. It's massive. We are basically back in price discovery, it looks like. We broke resistance around 11:15, and we didn't just break it. We exploded through it on the 4-hour. Let's check a larger time frame. And let's see. I mean, even if I use that as support, which isn't, it's here. We exploded through that too on the daily. And the weekly is right there. So I'm going to be taking a look at this to see if we can break past 13 cents, because if Brett can break past 13 cents, that's on the USD value, not Ethereum value. That would be awesome. So on that note, again, not working positions today just because WIF has been running so much. So we're going to head over to Orca version 2, take a look at some liquidity pools real quick before I call it a day. Some of you may have already seen this if you were at the live stream yesterday. This is my Orca account. You can see that my SOUSDC is way out of range. I want to see if it fell back in, but more than likely this one is probably going to have to be rebalanced. I will keep everyone posted what I decide to do. But this has been an absolute awesome position, especially the last few days. It is a meme coin paired with a meme coin, PopCap paired with WIF. Love this pool. You can see that I'm a little bit to the left side of the range. WIF is actually outperforming PopCap a little bit right now. And on this one, I'm basically earning approximately, let's see on this. almost 0.7% today, which, on a yearly, gosh, I'd have to calculate that. 0.673, 365. Let's bring up the calculator, see what that is, ladies and gentlemen, because that looks like some killer yield, actually, right? Oh, whoops. 0.673. Oops. 0.673 times 365. So right now, I mean, that freaking pool's earning 245%. And it's earned anywhere from like 50% to 300% on and off whenever these trades are occurring. And it's allowed me to kind of build up a little bit of pop patent with tokens without having to put capital towards it. I've been able to put my capital more into just harder assets that I have even more conviction in, which, Bitcoin, Solana, Ethereum. I am going to have to start looking at some of my allocations, making some adjustments. That's next on the list, probably over the next couple days. But to conclude here, I hope that you all have a great week. Thank you again for tuning in for today's video at Dad's DeFi Space. We hope these insights helped you to make informed decisions, make profitable choices in the ever-evolving crypto and DeFi ecosystems. To stay up to date with the latest strategies and market trends, be sure to hit that like button, subscribe to Dad's DeFi Space, turn on your notifications so you'll never miss out on any of our channel's content. And for more in-depth resources on the DeFi space and for a great private community, you can go check out CryptoLabs Research, Underdog Investment Group, 20% off your first month. And if you're looking just for a community of people who will support you on your DeFi journey, free educational resources, check out dadsdefispace.org. Thank you again for watching, and I'll see you again in the next video. Peace.